Welcome back to the deep dive. Today, we're doing something a little different. We are popping the hood on a machine that drives literally trillions of dollars in global commerce every single year.
Yeah, we really are.
And we aren't talking about, a business philosophy or some new marketing trend. We are talking about the engine room of SAP, specifically transaction code VOV8.
VOV8.
Yeah.
The sales document type configuration. I can practically hear some people reaching for the skip button right now, but don't do it.
Exactly. Stick with us because while it sounds like, dry technical manual stuff, you told me that this is basically the heartbeat of the entire sales operation.
It is the heartbeat, or maybe even the DNA is a better way to put it. If you want to understand how a company actually functions.
Like, not what their website says.
Right, exactly. Not the marketing copy, but how they actually execute business. You look at VOV8.
That's a pretty bold claim. But looking through the research you sent over for this deep dive, I actually started to see it. This isn't just about data entry. It's not just a drop-down list where you pick order or quote.
No, not at all.
This is about defining the personality of every single transaction that flows through a company.
That is the perfect word for it. Personality. Think about it. A business doesn't just sell things in one uniform way. They have long-term legal agreements. They have really angry customer returns. They have urgent get-it-out-the-door-now situations. And they have polite, casual quotes.
Right.
To a human being, the difference between a lawsuit waiting to happen and a casual chat is obvious. But to a computer, to SAP, it's all just zeros and ones until you tell it how to behave.
And that's the hook for me today. How does the system know? How does it distinguish between a legally binding commitment to ship, say, 10 tons of steel and a simple maybe sent to a prospect? The answer, as it turns out, based on our sources, is entirely locked inside this one transaction code.
It is. And our mission today is to decode that logic. We aren't just going to list fields, That's what the F1 help key is for.
Yeah, nobody wants us to just read a manual.
Right. We want to understand the interdependencies. We want to understand why these settings matter for the actual business process. And more importantly, what happens when you get them wrong.
And trust me, looking at the notes on Maverick returns and phantom inventory, getting them wrong sounds like an absolute disaster for you and your company. So let's jump right into section 1. Let's talk about identity. The source material calls the sales document type the header level controller. Unpack that for us.
Well, imagine the sales document type as the captain of the ship. It sits at the header level, meaning at the very top of the document hierarchy.
Okay.
Whatever rules we set here in VOV8 apply to the entire transaction from start to finish. It decides the fundamental nature of the interaction. Is this a standard order? Is it a return? Is it a rush order?
And once that decision is made, once the user types OR for standard order, it basically triggers a chain reaction.
A massive chain reaction. It's the first domino. The moment you select that document type, the system looks at VOV8 and figures out, well, which pricing procedure do I use? What output do I generate, like emails or printouts? What text needs to appear on the screen? If you pick the wrong type, the wrong dominoes fall, and you end up with a mess.
One of the first things that gives a document its identity is its name, or rather, its number. The numbers game. I found this surprisingly interesting because I usually take order numbers completely for granted.
Most people do.
But you have two distinct worlds here in the configuration. Internal assignment and external assignment.
Right. And this is a debate that happens in almost every single SAP implementation project. Internal assignment is the autopilot mode.
Which is VN01 in the system, right?
Yes, exactly. It is the gold standard for most businesses. You define a range, say 1,000 to 1999, and every time a user saves a new order, SAP just grabs the next number sequentially. 1001, 1002, 1003.
Why is that the gold standard, though? Is it just convenience?
It's partly convenience, but it's mostly about audit trails.
Finance.
Always finance. In finance and auditing, you need sequential integrity. You need to prove to an auditor that order 1002 didn't just disappear into the ether.
Right. If you have gaps in your numbering, auditors tend to get suspicious.
Very suspicious. So for standard sales orders or returns, you almost always want that sequential system-generated number.
But then you have this other option, external assignment, where the user or maybe another computer system tells SAP what the number should be. That sounds risky to me. Why would you ever want to let a human type in an order number manually?
It can be super risky, but there are specific use cases. The biggest one is legacy migration. Let's say a company has been running on an old AS400 mainframe system for 20 years.
Oh, wow. Yeah.
Their customers know their order numbers. They have them printed on physical paper in filing cabinets. If you migrate to SAP, you might want to bring those old historical orders over and keep the exact same number so you can search for them later.
Ah, so you force SAP to accept the old ID, essentially.
Exactly. You tell SAP, hey, don't generate a number, I'm giving you one. Another case is EDI, electronic data interchange. Sometimes a massive customer like a Walmart or an Amazon will send a purchase order, and for technical reasons, you might map their PO number directly to your sales order number.
Is that common?
It's rare because usually we just store their PO number in a separate reference field, but I've definitely seen integrations that demand it.
Now, I saw a tip in the notes here labeled Consultant's Edge. It talks about a visual trick for rush orders. This is the kind of stuff I love. The human element of configuration. It's not just about data, it's about usability.
Oh, I love this trick. It's such a simple way to make life better for the people on the warehouse floor. Imagine a busy warehouse manager. They're printing lists of orders to pick, hundreds of lines of text, small font. A standard order usually creates a number starting with a 1.
Right, just a sea of numbers starting with 1.
Exactly. But a rush order, something that needs to go out right now before the truck leaves in 10 minutes, needs to stand out. You don't want that buried in the stack.
So you manipulate the number range.
Precisely. You configure VOV8 so that the rush order document type pulls from a completely different number bucket. Maybe it starts with a 9. So when that warehouse manager scans a list of 50 orders and 49 of them start with 1, but one of them starts with 9, their eye goes right to it.
Oh, that's brilliant.
I think, oh, that's a 9 series. That's a rush. Get it on the truck.
That is so simple, but I bet it saves so much headache. It's using the data structure to signal urgency to a human brain.
It is. It's low-tech usability engineering. And it literally costs nothing to implement during the project.
Speaking of numbers, let's talk about the gap of 10. This is one of those things that if you don't know why it's there, it just looks weird. You add line item 1, it's item 10. You add the next, it's item 20. Why not 1, 2, 3?
The gap of 10s is a bit of a relic, but a crucial one. It goes back to the days of COBOL and mainframes before drag-and-drop interfaces even existed. In older systems, if you forgot to add an item in a list, you couldn't just insert a row easily.
Right, there was no right-click and insert.
Exactly. But if you numbered them 10, 20, 30, and you realized, oops, I forgot to add the batteries that go with the toy in line 10, you could manually type in line 15.
So it's basically leaving yourself some wiggle room.
Wiggle room, exactly. But in the modern context of SAP, we don't really type line numbers manually anymore. However, it's still vital for something called a B-BOM explosion, bill of materials.
Break that down for us. What does an explosion look like in SAP?
Sure. Let's say you sell a specialized gaming PC. In the sales order, you enter gaming PC as line item 10. But the warehouse can't just pick a gaming PC if it's custom. They have to pick the individual components. So the system needs to explode that line item into its parts. The tower, the monitor, the keyboard.
And it needs a place to put them in the list.
Right. It puts the tower at 11, the monitor at 12, the keyboard at 13. If you had numbered your main items 1, 2, 3, there would be 0 numeric space to insert the parts of the PC between the PC itself and the next distinct product the customer bought.
That is the aha moment for me. It's not just tradition, it's a structural necessity for complex products.
Correct. It keeps the sub-items grouped logically with their parent item. If you didn't have that gap, your invoice would be a jumbled mess of parts with absolutely no structure.
Moving on to section 2, the hard-coded DNA. This sounds a bit more ominous. The notes call this the unchangeable core. We are talking about the SD document category, or technically VBTYP.
VBTYP, yes. If VOV8 is the personality, VBTYP is the biology.
Yeah.
It is the species. And this is arguably the most critical control in the entire transaction.
Why is it so rigid? The notes say specifically that you cannot create custom categories. You get what SAP gives you.
Because the underlying code of SAP, the millions of lines of ABPAP programming that run the global economy, relies on these hard-coded categories to know what to do at a kernel level. C means order, B means quotation, H means return.
So you can't just invent a new one.
You can't just invent a category X because the coding deep in the background wouldn't know how to process it. It wouldn't know if you shipped the general ledger or not.
So what happens if a consultant gets sloppy? The source mentions a huge risk of copying a standard order to make a return, but forgetting to change the category.
This is a classic rookie mistake,
Mm-hmm.
and it is incredibly dangerous. Let's say you take a standard order, category C. You copy it, rename it Z return, but you leave the category as C. To the user, it looks like a return. It literally says return on the screen.
Right.
But when finance runs the numbers, the system treats it as a forward sale.
Oh, wow. So instead of crediting the customer, the system thinks you sold them more stuff.
Effectively, yes. It's a positive revenue event instead of a negative one. Your accounting is backward. Your inventory is wrong because the system thinks you shipped goods out, not brought them in.
That sounds like a fast track to getting fired.
It really is.
Yeah.
And think about the reporting impact. That's a nightmare. If a VP runs a report saying, show me all returns, the report looks for category H. Your weird custom order is category C, so it won't even show up on the returns report. You've created a phantom document that is messing up the books but hiding from the reports.
That is a massive hidden risk. It really emphasizes that you have to know what you're doing in VOV8. You can't just guess or copy-paste blindly and hope it works.
Absolutely not. It's the foundation. If the foundation is cracked, the house falls down eventually.
Let's talk about control mechanisms. We have these things called blocks and references. The block indicator seems really useful for checking work.
It is. Think about a credit memo request. A customer calls and says, you overcharged me, I want $5,000 back. You don't want a junior sales rep to just hit save and instantly credit $5,000 to the customer's account.
Right, you want a sanity check there.
Exactly. So in VOV8, for that specific document type, you set a default billing block. The document saves, but it sits in a blocked state. It forces a workflow where a manager has to go in, review the claim, maybe check the original invoice, and physically remove the block before the money actually moves.
And then there's reference mandatory. The notes call this the anti-fraud control. That sounds pretty dramatic.
It's dramatic, but very, very real. It's about preventing maverick returns. Imagine a customer who buys a product for $50 when it's on sale. Then, 2 months later, they try to return it when the retail price is back up to $100. If they return it without referencing the original order, the system might default to the current active price.
So they just made a $50 profit off you.
The old buy low, return high scheme. Exactly. Or imagine them returning goods they never even got from you. Maybe they bought them from a competitor.
I see.
By setting reference mandatory to M in VOV8, the system literally forbids the user from creating a return unless they link it to an existing invoice in your system.
It effectively says, show me the receipt.
Show me the receipt, and more importantly, I will copy the pricing from that exact receipt. So they paid $50, they get $50 back. No more, no less. It ensures tax consistency and pricing integrity.
I love that. It's system-enforced honesty. Now let's tackle the division debate. This part of the outline discusses item division versus header division. To me, division usually means a product line, right? Like electronics versus motorcycles.
Correct. In SAP, a division is a way of grouping materials to control the sales channel. Usually, a sales order belongs to one division. You have an electronics order.
But the notes mention a specific checkbox in VOV8 called item division. If you check it, something magical happens.
This is a huge usability feature. If you don't check it, the header dominates the whole document.
Yeah.
If I start an electronics order, the system expects everything in the cart to be electronics. If I try to add a service pack, which might be in the service division, the system yells at me or forces the service item to pretend it's electronics.
Which creates accounting errors on the back end, I imagine, because services and hardware should probably go to different revenue accounts.
Right. It messes up the general ledger posting. But if you check item division in VOV8, you are telling the system, hey, relax. Let the header be electronics. But if I add a service line item, let that line item keep its own identity.
So I can have a single order with a laptop from Division O1 and a warranty from Division O2?
Exactly. And that means one document for the customer, one invoice, one seamless experience. Without that checkbox, the poor sales rep has to create 2 separate orders, one for the laptop, one for the warranty. It doubles the data entry work and confuses the customer, who ends up getting 2 bills.
It's amazing how one tiny checkbox can determine whether a user loves or hates the system.
It really is. That's the power of VOV8. It defines the user experience just as much as the financial mapping.
Let's move to Section 3. The brains. We're looking at probability, credit, and information flow. Let's start with probability. This seems to connect sales directly to the supply chain.
This is where sales talks to the factory. When a sales rep puts an order in, the factory needs to know, is this real? Do I need to turn on the machines?
Because if it's just a quote, we shouldn't start building it yet.
Precisely. In VOV8, you assign a probability percentage to the document type. An inquiry might be 30%. A quote might be 70%. A standard order is 100%. This number feeds into something called SOP, Sales and Operations Planning.
So if I have a probability of 100%, what does the system do?
It passes a requirement to MRP, Material Requirements Planning. It tells the factory, we need this widget. Buy the raw materials. Schedule the labor. This is happening.
And if it's 0%?
The factory sees nothing. It's completely invisible to them.
So if you mess this up, say, you accidentally set a, quote, document type to 100% probability.
You might have the factory buying raw materials and scheduling shifts to build products for a customer who hasn't even said yes yet. You end up with excess inventory and wasted cash.
High stakes for a little percentage feel. Next up is Read Info Record. This sounds like a translation tool.
That's a great analogy. It's the link to the Customer Material Info Record, or CMIR. See, customers don't speak SAP. We might call a product MAT100 XYZ internally. The customer just calls it Part A.
And you don't want the sales rep to have to manually look that up every single time they type an order.
Right. If Read Info Record is checked in VOV8, the user can type Part A directly into the order. The system looks at the info record, sees that Part A equals MAT100 XYZ, and automatically swaps it.
It speaks the customer's language.
It does, and it does more than just translation. It can also prioritize specific rules for that customer material combo, like which plant to ship from. Maybe for this specific customer, this specific chip always ships from the Austin plant, not the San Jose plant. The info record controls that logic, but VOV8 decides whether we even listen to it.
Very cool. Now let's talk about risk again, the check credit limit field. The notes call this the gatekeeper.
This is the on-off switch for the entire credit management module. You can spend months configuring complex credit rules, limits, risk categories, dynamic credit checks. But if this one field in VOV8 is left blank,
none of it happens.
None of it. The system won't even look. You could have a customer who is millions of dollars in debt, way over their limit. And if you use an order type where this field is blank, the system will let them buy more without a peep.
That is terrifying. So what you put there to prevent that?
Usually you set a D. That stands for Automatic Credit Control. That tells VOV8, go ask the credit module, which is transaction OVA8, what the rules are and apply them. It hands off the responsibility to the specialized credit engine.
So D is the trigger. If it's blank, the gun basically has no bullets.
Exactly. It's a very common mistake in testing. People will say, why isn't the credit check working? Check VOV8 first.
Moving on to Section 4, the user experience and process flow. We've touched on how VOV8 affects the factory and the accountants, but what about the person actually sitting in front of the screen? Let's talk about the screen sequence group.
This controls what the user actually sees. SAP has hundreds of tabs and thousands of fields. For a standard order, you need to see shipping tabs, weight, route, Incoterms. But what if you're doing a service order for consulting hours?
You definitely don't need shipping weights for consulting hours.
Right. It would just clutter the screen and confuse the user. They'd be wondering, why is it asking me for the weight of a consultant? So using the screen sequence group, you can tell SAP, for this document type, hide the shipping tab completely. Show the billing plan tab instead.
It cleans up the interface.
It creates a bespoke experience for that specific process. It reduces cognitive load for the user.
Then there's the transaction group. The notes mention a mystery involving transaction VA05. I've actually heard people complain about this. They'll say, I create a quote, but I can't find it in my list.
Yes, the classic panic. VA05 is the standard list of sales orders report. But by default, it filters based on this transaction group. Standard orders are group 0. Quotes are usually group 2.
So if I run a report for group 0, I literally won't see the quotes.
Right. And deeper than that, it decides which database index tables the document lives in. FECA for orders, VAPMA for items, and so on. It organizes the data in the backend so retrieval is faster. But for the user, it just explains why their quote isn't showing up in a list of orders. They live in different buckets.
Got it. Now, the price is right. Document Pricing Procedure, or DPP. This is described as the key to pricing determination.
Pricing in SAP is a complex formula. It looks at who the customer is, what the sales area is, but it also needs to know what the document is. That's the DOPP.
Can you give me an example of how changing this key changes the price?
Let's look at the warranty replacement scenario. You are sending a replacement part to a customer. It's the exact same part you usually sell for $1,000. But this time, it needs to be free.
You don't want the sales rep to have to manually type in a discount every time. They might forget, or type 10% instead of 100%.
Exactly. Human error is the enemy of good data. So, for the warranty order type, you assign a special DPP, let's say Z. Then, in the pricing configuration, you say, if DPP is Z, trigger a pricing procedure that has a mandatory 100% discount condition.
So the moment they choose that order type, the price drops to 0 automatically.
Automatically. The user doesn't even have to think about it. The document type enforces the business rule.
That is smart automation. And finally, in this section, approvals or status profiles, this is about workflow.
This helps you manage bureaucracy without having to write custom code. You can attach a status profile directly to the document type. It can say, if this order is over $10,000, set a status that blocks billing.
And who can unblock it?
Only a user with a specific authorization key, like a manager. Once they click Approve, the status changes and the block lifts. It allows you to build multi-level approval chains directly into the document flow.
So VOV8 isn't just defining the document, it's defining the hierarchy of who controls it.
Exactly. It enforces authority.
Section 5 is all about execution, shipping and billing, logistics logic. We start with delivery type. This seems straightforward enough, mapping the order to the delivery.
It is, but it's vital linkage. When you are ready to ship, you don't want to pick a delivery type manually. You want the order to spawn the correct child. A standard order, which is OR, spawns a standard delivery, LF. A return, RE, spawns a return delivery, LR.
It keeps the lineage pure.
Right. You don't want a return order accidentally creating an outbound delivery document. That would mess up the warehouse process completely. The warehouse would be trying to pack something that they should be receiving.
But here is a cool feature, shipping conditions. The notes say this is an override capability.
This is super powerful. Usually shipping conditions come from the customer master record. If I'm a customer and I usually want truck delivery, that's on my master record.
But what if I call in a panic and say, I need this rush?
You create a rush order. In VOV8, for the rush order type, you can hard-code the shipping condition to O1, which might mean Express Air or ASAP.
And that overrides my standard preference.
Yes. The document type trumps the customer master. It forces the system to pick a faster route, maybe a completely different shipping point, to get the goods out the door.
And speaking of speed, immediate delivery. This is the signature control for cash sales and rush orders.
Normal orders just sit there until someone runs a delivery due list to create shipments in a batch. But for a cash sale, where the customer is literally standing at the counter, you can't wait for a batch job tonight.
They want the box now.
So you set immediate delivery to X or A. The moment you save the order, the system kicks off a background job to instantly create the delivery document. It saves the user from having to go to a second transaction code to ship it.
Efficiency. Now, show me the money. Billing. We have delivery relevant, which is F2, and order relevant, G2. What's the difference?
It's about the trigger. For physical goods, you usually bill after you ship. No ship, no bill. It's delivery relevant. The invoice is based strictly on the delivery document.
Makes sense.
But for services, like consulting, or for a credit memo, there is no physical box to ship. So you bill based on the order itself. That's order relevant.
The notes mention a hybrid scenario, a standard order with physical goods and a service fee. How does VOV8 handle that?
This is where it gets nuanced. VOV8 holds the default billing types for both scenarios. It says if you bill by delivery, use type F2. If you bill by order, also use type F2.
But how does the system know which line item is which?
That's handled by the item category, VOV7, which we'll discuss in a future deep dive. But VOV8 sets the table. It provides the billing types that will be used, regardless of the method the item category chooses.
One last technical point in billing. Intercompany billing. The field condition type line items, usually EK02. Why do we need to know this?
If you are a global company, you often have one subsidiary selling and another subsidiary shipping. The shipping plant needs to charge the selling entity for the cost of goods. That's intercompany billing.
A bill between ourselves.
Right. Field EK02 is the price tag. It tells the system, take the cost from the material master and populate it into this condition type on the intercompany invoice. It ensures the internal transfer price is accurate, so the shipping plant recovers its costs.
It's keeping the internal books balanced.
Crucial for transfer pricing and tax compliance.
All right, we've covered a lot of theory. Now let's get into section 6. Deep dive scenarios. We're going to bring these dry fields to life with 3 specific stories. I love this approach. Let's start with scenario A, the cash sales.
Visualize this. A contractor walks into a building supply store. He needs 10 bags of cement and a drill. He pays at the counter and loads them into his truck.
No waiting for a truck next week. Immediate gratification.
Exactly. So in VOV8 for the CS document type, we set immediate delivery to X. The moment the clerk saves, the delivery is created in the background.
Or what about shipping?
We set shipping condition to 10, which implies customer pickup. This ensures the system doesn't try to schedule a UPS truck. It knows the customer is taking it with them.
And the twist here is the billing type. It uses BV.
Right. Standard orders use F2, which creates a formal invoice that we mail to the customer. BV creates a cash receipt.
So it prints out a little slip right there.
It prints the receipt immediately, usually via output type RD03, so the customer can walk away with proof of purchase. It doesn't print a second invoice later because that would confuse everyone.
It perfectly mimics the retail experience inside a massive enterprise system.
Exactly.
Scenario B, the rush order. How is this different from cash sales? The customer wants it now, right?
They want it now, but they aren't standing at the counter. Imagine a hospital calling for urgent medical supplies. They say, "We need them delivered today."
Okay, urgency is very high.
So we still set immediate delivery to A to create the delivery document instantly and get the warehouse moving. We might hard-code shipping conditions to Express.
But the money is different.
Yes. The hospital isn't paying with cash at the door. They have payment terms, like net 30. So unlike cash sales, the rush order uses billing type F2, the standard invoice.
So the goods fly out the door, but the paperwork takes the slow standard path through accounts receivable.
Precisely. Fast logistics, standard finance, that's the rush order.
Scenario C, the free of charge sample. Marketing wants to send out 1,000 widgets to potential clients. They are free.
But free to the customer doesn't mean free to the company. We lose inventory. We need to track that cost.
So how do we set this up?
Document category is I, which means order without charge. But the key is the pricing procedure. We point it to a specific D2PP, let's say B, which triggers a pricing scheme that sets the price to 0 for the customer.
So the invoice is literally $0.
Correct. But here is the control. We set a default delivery block in VOV8, maybe block 01.
Whoa, why block it? Marketing wants them sent.
Because sales reps could get overexcited. Hey, free samples, let's send 500 to my cousin. The block forces a manager to review the order. Do we really have stock? Is this a legit prospect? Once approved, the block is removed and the warehouse ships it.
It's the adult supervision setting.
It protects the inventory assets.
These scenarios really show how you mix and match the fields to solve real problems. It's like a recipe.
It is. You are the chef. VOV8 provides the ingredients.
Now, Section 7, expert configuration tips and traps. These are the lessons learned the hard way. The golden rule is up first. Never modify standard types.
Never touch OR, QT, or LF.
Why? They're right there in the system. Why not just tweak OR to do what you want?
Because SAP does upgrades. When you upgrade to the next version of S/4HANA, SAP might reset the standard tables to their default state. If you changed OR, all your changes get overwritten.
And your entire business process breaks overnight.
And you are fired. Always. Copy S. Copy OR to ZOR. Make your changes in ZOR. SAP will never touch your Z codes during an upgrade.
Safety first. Next, naming conventions.
Decide this on day 1. Don't just make ZOR1, ZOR2, ZABC. It becomes a complete mess. Use ZOR for domestic, ZOEX for export, ZRE for returns. Make it intuitive so that 5 years from now, a new consultant can look at the list and know immediately what they are.
Very logical. Now, the common distribution channels trap. I feel like there is a story here.
This is a classic why isn't it working moment for junior consultants. You create a beautiful new document type, Z service. You configure everything perfectly. You go to VA01 to create it, and it's not in the drop-down menu.
Panic ensues.
You think you broke the system, but usually it's just because you forgot to permit that document type for the sales area. You have to go to transaction OVLK or OVAM and say, yes, Sales Org 1000 is allowed to use document type Z service. If you missed that link, it's completely invisible.
It's the velvet rope. You built the club, but you didn't put the name on the guest list.
Exactly.
Let's talk about incompletion procedures. You called them safety nets in the notes.
I see so many companies rely on training. They say, tell the users to always enter the PO number. Users forget. They're busy.
So what do you do instead?
You configure an incompletion procedure. You tell VOV8, for this order type, the PO number field is mandatory. If the user tries to save without it, the system throws a dialog box. Data missing. It flat out refuses to process the order.
The system becomes the enforcer.
It's better to annoy the user during entry than to have the finance team chasing missing data 3 weeks later when they're trying to close the books.
Finally, the cost of change. The notes say changing VOV8 after go live is a nightmare.
It is the ultimate nightmare. Imagine you have 10,000 open orders in the system of type ZOR, and you decide, you know what? We want to change the number range, or we want to change the document category.
Can you do it?
Technically, maybe, but the existing data becomes corrupted. The historical reporting breaks. The open orders might get stuck in limbo because they don't match the new configuration anymore.
So get it right in the blueprint fairs.
Measure twice, cut once. Once you are live, VOV8 is basically set in concrete unless you are willing to do a massive data migration project.
That is a sobering warning.
It keeps consultants employed, though.
True enough. We are reaching the end of our deep dive. Let's synthesize this. We started by saying VOV8 is the heartbeat.
It is the skeleton in the heartbeat. Decisions you make here cascade down to pricing in OVKK, billing in VS-ORIO1, shipping in OVL2, and credit in OVA8. You cannot be a good SD consultant if you don't master VOV8. It is the root of the tree.
And as we close, we promised a provocative thought for you, the listener, something to leave you thinking about. The notes mention lead time in days and pricing dates.
Yes. Think about this. In VOV8, there is a field called Proposed Pricing Date. You can set it to today's date, which is when the order is typed, or Requested Delivery Date, which is when the truck leaves.
Okay, sounds like a pretty minor detail.
In a stable market, sure. But imagine you were in the oil and gas industry or commodities. Prices fluctuate wildly every single day. A barrel of oil might be $70 today and $80 next week.
Oh, I see where you're going with this.
If you change that one field in VOV8, you fundamentally alter the revenue of the company. Do you charge the customer the price when they asked for the oil, or the price when you actually gave them the oil?
That could be $1 million difference on a single order.
Exactly. A single configuration toggle in VOV8 defines the company's exposure to market volatility. It's not just IT, it's high-level financial strategy.
That is mind-blowing. It really proves that configuration is business strategy.
It absolutely is.
Well, on that bombshell, we are going to wrap up. But don't worry, we aren't done with the sales process. If VOV8 is the header controller, the captain of the ship, next time we are going to look at the crew.
That's right. We will be diving into VOV7, the item categories. Because while the header says this is a standard order, the item category decides this line is a product, this line is a service, and this line is a freebie.
And trust me, the interaction between the two is where the real magic happens. So stay tuned for that. Thanks for joining us on the deep dive.
See you next time.